Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. A significant second bullish white soldier yesterday, this time as a bullish long white Mariposa that punched up through and closed over the gold long moving average, currently at 71.27, as well as up and out the big congestion band, some of it which is dubious but which stretches from 68.33 to 70.13, and then again at 70.67, followed by 71.29 to 72.29. Prices peaked just under the next congestion band overhead, which is between 73.18 to 73.42, which has just above it the 50% absolute Fibonacci line at 73.73. In the bigger picture, this is yet another move higher, up and out of the showrunner for this market since last summer. The many times broken and many times repaired dark blue April to July 2024 bearish shift pitchfork. The dark blue upper time for this is below, and that's currently at 68.49. This is still an influential pattern, despite the breaks both higher and lower. Now so far today, a small, seemingly half-hearted attempt higher before dropping back down, though still just entering the top of the old congestion band between 72.29 down to 68.33, and it was looking a bit indecisive earlier on, but it's looking like it might be making a shooting star pattern right now. Spot gold. A reactionary bullish harami yesterday, capped by the green short medium moving average, currently at 333.7 or 33.37, let's call it that. 33.37 after the previous session's fourth bearish black crow pattern. Prices have dropped down below with a second consecutive close under the small late June to late July bull channel, which is currently 33.54 to 34.40, as well as being well below the broken dark blue lower time, currently at 34.40 of the related early April to mid-May bullish shift pitchfork. As I said before, it's not unusual to see markets trail along the underside of such a broken upper and lower tines, pitchfork upper lower tines, such as we've seen here, and the risk is that we may push back up over the broken lower tine. However, that pattern now seems to have ended. Now, I still have on my daily chart target X at 35.30 and the harder to reach target X1 up at 36.11 for the April to mid-June reverse head and shoulders pattern. The market has failed to exploit any attempts higher, and I'll retire them after this video commentary. I'd also previously noted that the action since about mid-April offered some potential for a three peaks and domed house pattern and or a possible inverted cup with handle pattern. The first pattern is no longer viable, and I'll retire the targets for this after this video commentary. However, the second pattern, the inverted cup pattern, that was created between mid-May to late June and recently had the handle construction phase, well, this pattern seems to be starting to play out. Thus, I will need to start looking lower very soon. Now, so far today, a small continuation higher from yesterday, but the market is still capped by the bright green short medium moving average. It's not bearish, it's just going slightly higher, but it's being capped by that bright green short medium moving average for now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.